Do you want a financially secure future, not just for yourself, but for your loved ones as well? This is Generations of Wealth, the podcast that breaks down the most effective wealth building strategies you can easily apply to your own life. Join investor and international best-selling author Derek Dombeck in exploring practical tips and sound advice on building a profitable business, creating a powerful brand, or getting into the thriving world of real estate investing. This is your chance to create your very own financial roadmap to live your vision, love your life. Let's begin this discussion with your host, Derek Dombeck.
Welcome to the Generations of Wealth podcast. I'm your host, Derek Dombeck, and today we've got Eddie Speed, who, if you've never heard of Eddie, I'd be pretty shocked actually, but Eddie has been in the note buying business for over 40 years. He's also been running NoteSchool and teaching people about buying notes for a long time. Before we bring Eddie on though, I just want to kind of throw a couple things out there. First of all, if you are just finding the show, welcome. Thanks for finding us. If you're coming back, show after show after show, we appreciate you. We'd love for you guys to share this, spread the word. Let's grow the Generations of Wealth family as much as we can. And, give us all the likes and the thumbs up and the 5-star reviews, all that kind of stuff. Really appreciate it. Also, get involved in our Facebook group. Go on Facebook or go to the website and you can get a link. But go on Facebook and join the Generations of Wealth Facebook group. Start interacting. And the last thing I'd like to mention is Eddie and I have known each other for quite a few years because we've been involved in other events, masterminds, things of that nature. So right now, my mastermind, the REI Circle of Trust, has got a few spots available. So if you are looking to really elevate your game, elevate your business, learn how to live your vision and love your life, go to reicot.com, fill out a little bit of information. You and I will jump on a call and we'll see if you're a fit or if we're a fit for you. So with that, let's bring on Eddie Speed. Mr. Eddie Speed, welcome to the Generations of Wealth show, man. It's such a pleasure to have you. We've crossed paths at other people's events, mutual friends, but we've never gotten a chance to just jam about notes. So if you wouldn't mind, just introduce yourself to anybody that's living under a rock and has never heard of you, which is crazy. And man, let's just jump in.
How are you? I'm glad to be here, first of all. I'm sort of the old guy in the note business. Now, I entered the business as the young guy. I was 20 years old, but that was in 1980. And so I'm on my 44th year in the business. And I was deep in the note buying space for many years, 20 years plus, before I ever had any form of a training thing. So I built the training business to figure out how to go do business with people. Right. It was a little bit different angle than some other people that kind of, said, I'm going to go focus on my income being just in training. We still are deep in the note buying space, but we train people how to do it. And we kind of think right now is like we're in the cycle is in our advantage. It's in our direction.
Why do you think that is? I mean, after 44 years, you've been through up and down markets. You've seen all these different cycles. But for those that are brand new, why do you think that now is the great time?
Well, one thing we've tried to do well in the training side is really listen to our customers, listen to their pain, listen to what questions they have, listen to what really is driving their motivation. And a lot of people who have rental properties today all have the same complaint is I don't make any cash flow, right? I don't get rewarded for my investment until, quote, later. And then when real estate, a couple of years ago was going up by 20% without you having to do much for it, then that was a great idea. But now as we're kind of flatlining in the business, people are like, well, wait a minute, I'm not so sure that that's going to, what history did 3 or 4 years ago is not necessarily going to happen again. And I'm frustrated because I got something that takes up a lot of time and a lot of aggravation, and I don't feel like I'm getting well paid for it. If they're investing in syndications, well, you know the deal, right? It would take, if you're going to invest in a syndication, you need to do some serious investigation because the industry definitely has issues. I'm not saying every deal has issues, but there's definitely there's some smoke over there. Can we agree on that?
Absolutely.
So the market timing is people are looking for something to invest in, and they tell us all the same thing. I want less time commitment, and I want more cash flow.
So compared to the person that goes out and buys a duplex or a single family or small multi, and we all know, or most of us know, how much work that can be depending on your quality of tenants. A lot of people, I think, get intimidated by notes, right? I mean, years ago, that's how I felt before I started a lending company. And then I realized, I love notes. But, if I were brand new and I'm saying, okay, I'm going to either go buy a duplex or I'm going to start small in notes, what's the barrier to entry? What does it look like?
Well, it's funny that like people perceive that, something that has a lot more commitment and a lot more details, which is owning a rental property, is easier than something that you can have 90% of it done for you. You can have a loan servicer that services the loan. We have things that we help people do, locate notes, help them even underwrite notes. Somebody comes to NoteSchool and goes down a path, not just somebody that calls us. Somebody calls and says, hey, I got $2 million. I don't want to know anything. Just deploy my money. I'm like, I'm not your guy because I've not. So there's some level of knowledge that because it's important because it's your money.
Mm-hmm.
It's okay to look over our shoulder and see that we follow the checklist that we talked about. Okay. And a lot of it can be outsourced, as you well know. And so there's a perception that, rentals and flipping houses is easy and notes is difficult. And if people think flipping houses is easy today, they might want to call some of the biggest operators in their town because those old boys are doing hat tricks to keep making it work, right? And so on the other side, are notes easy? And the answer is, I bought 50,000 notes so I can drive the race car. You can drive the race car. There are driver training cars, so to speak, that are a much easier path to start with, that you don't have to start out with the most complex transaction in the world.
So I guess explain a little bit about what you're looking at when you're buying a note, because there's performing notes, there's non-performing notes, there's first position, second position. To somebody that doesn't know any of that, what would you say?
First thing I'm going to start somebody doing, probably with not a heavy background in notes, it's going to be buying performing first lien notes. Seconds are probably risky. It's not likely that that's where a beginner should start. And so first lien real estate notes right now. Well, I'll tell you this, we looked at over 1,200 notes last quarter of seller finance notes in our shop at Colonial, not NoteSchool, but the note buying side of our business, Colonial. So we get a lot of looks, right? We didn't bid on 1,200 notes. We bid on about 750. So literally we called out and wouldn't even price 500 notes, right? And so you're saying, well, what do you look at? We look at the property. Is it good property? Is it land? Is it a house? Does somebody want to own it? And if somebody didn't want to own it, can they sell it? Like if it's a swamp lot in, Florida, or a sand lot in Arizona, yeah, it may be junk, right? Because somebody bought it that really maybe bought it more on emotion than really facts or circumstances, versus 20 acres of nice property that you and I like the outdoors and would love to go to on the weekend. You see the difference? That's good land.
Yep.
What about houses? It's the same thing, right? Is the house in good condition? Is it a desirable neighborhood? Is it going to make their life better to own it? I always look at it and say, if the note doesn't make their life better, it's probably not a good note. So I start out with kind of a filter. Second thing is the borrower. Not everybody needs home ownership, right? Popular, as non-PC as that may sound, not everybody's in a situation in life that home ownership fits them.
So you're not running for president then. You don't
Yeah, that's a whole nother subject right there. And I bought 50,000 seller finance notes. So I have a little experience in like what actually works over time and what doesn't work over time. Mine is not theory anymore, right? And so I teach that. Like, what have I learned in 50,000 notes? What if I look back over time and say, these are notes I would spend time on. These are notes I wouldn't spend time on. And it's just a risk management system. I mean, it's not brain surgery. We're saying, is it complicated? Well, if somebody didn't teach you how to break it down in a simple evaluation process, it probably could seem complicated. There's nothing I've said so far today that sounds complicated, is it?
No, absolutely not. But you have said specifically seller financing notes. So you're not targeting paper that was originated by institutions?
I'm very connected. You know that. I know I have everybody's phone number. Right now, institutional loans are too pricey. You're competing against Wall Street, and Wall Street's sitting on a bunch of cash, and they're wanting to buy what the industry calls scratch and dent loans. And right now in time, they're too pricey. I've got my ear to the ground. I'm focused on it. I talk to all the people that trade these things every day. I'm very, very connected with the biggest firms in the country that run these trades on scratch and dent loans. At the moment, compared to what I can go find in the marketplace somewhere else, they're too pricey. I bought more portfolios direct from seller, more portfolios of seller finance notes than anybody in the United States. I'm fairly comfortable in saying that. Right? Like probably times 2, right? So I know the product. I know how to filter it. I know how to do the stuff. And this is this rabbit's briar pack. Right now, I can deliver a 9 to about a 12% yield to investors that come through our lineage. And this kind of product, if I sold them scratch and dent loans, they'd be getting a 6 or 7% yield. Which one do you want?
Yeah, absolutely. And to me, now, I ran a hard money lending company, so it was very much person to person. It wasn't institutionalized. And I feel like you get more information when you're buying a seller finance note than if you are buying some institutional tape because.
Well, it depends on where you're buying it. Like if you're buying it fourth hand, and you weren't buying it from the original trade, you're probably, you could likely be buying tails, as we call it, right? There's heads and there's tails, right? So, but I'm connected with the heads. Like I can go get a first line trade. That's not an issue. It's just right now the market is paying too much and our competition are banks and hedge funds. And so if you've been doing it, if you got as many lines on your face as I do and enough gray hair, you learn when you're not going to win, and you learn to quickly to adjust and say, what can I win at? We're damn good at seller financing.
Yeah. Awesome.
So that's our game.
So before we started recording, actually, we were talking a little bit about how you read the market, and you mentioned something about this is a great time for notes because it's not a great time for banks. Can you talk about that?
Yeah, so let's talk a little bit about kind of historically where we are with banking. And this is a great thing that the press has done to suppress this news. This is news to most people. Now you can do an hour's worth of research and you're going to find out I'm exactly right. But it's not what they say on the nightly news, right? It's not what CNN is reporting. There's 2 classes of banks today, the top 25 banks and banks that are not the top 25 banks. Most analysis that is done are based on those 2 different banks. So the top 25 banks, that'd be Chase and Bank America and those guys, right? They're about 14% of their loan portfolio is commercial loans. Now, these charts and all this is available. I mean, this is all easily verifiable. I have my own podcast that we do this kind of stuff all the time. I'm not promoting that today, but you can watch NoteSchool TV. We talk about it very regularly, right? Then there's other than the top 25 banks, which are everything from regional banks to community banks. There's 4,800 FDI insured banks in the United States. 4,800. Okay. The other banks, other than the top 25, 44% of their loan portfolio is commercial loans. You think that's a problem?
That's a little top heavy.
1/3 of those loans are due for rate resets in the next 18 months. Commercial banks represented 72% of commercial lending from 2000, essentially 18 till now. So all of the issues that you and I are fully aware of with commercial real estate and syndications and all that stuff, guess who the daddy is that loan more money to those operators than anybody? So there is a significant issue with banking. There is all kind of speculation. We know that the latest report identifies about 500 banks as being really, really having an issue. Most people that call me today are trying to sell loans that have previously been banking all their stuff, have called me and said, the bank said, get this stuff out of here. That's the general. And look at hard money lending. Look at how many hard money lenders have gotten walked because their bank says we're not playing like we used to. That's because the banking industry and the pressure from regulatory, supervisory level folks that's what the problem is. So when banks are struggling, then they're not as aggressive in doing everything they could do. And then there becomes a void. Hard money lending and note buying become popular because it now becomes the alternative to what the banks were solving the problem. That's what's caused the opportunity, right?
Mm-hmm.
Listen, even pretty liberal news sources are saying in the next 5 years, 40% of the banks will be merged in with other banks, 50%, 35%. Like nobody's saying 10%. Nobody's saying 80%, but 50-50, 40-60, 50-50 seems to be the number that most people agree on, right? So is there an issue with other than the top 25 banks? And the answer is yes. What is their biggest problem? It's commercial loans.
Well, in commercial loans, to me, when you talk about syndications and the backlash this is going to have in raising private capital, whether you're a real estate investor raising private capital to buy deals or you want to raise private capital to buy notes with, there's so many people, and you and I could both go on a rant about this for a while, but there's so many people that went into these syndications, and I don't think they really understood they're in second position behind an institution, and that institution, they're gonna wipe out all those syndications, and there's another opportunity.
This is my capital stack. Okay, this from my two fingers represents the value of the property. This is leveraged at the bank. They're in first position because they have a mortgage on the property. This represents the equity. If the property goes down by 20%, there is no equity. It's just that simple amount. By the way, a year and a half ago, the banks changed their loan to value from 20% down to 40% down. Am I right?
Yeah, absolutely.
Okay. Well, what do the banks know that the other people that were investing in syndications didn't know?
The truth. And they know that they're fine. I mean, they can reposition. Well, not all of them are going to be fine, but a lot of the banks will be fine if they're at 60% LTV. They're not taking any losses, but the syndications, they're going to have to do cash calls or
real estate investing game and enjoy an unforgettable vacation with your family. Join us for the Generations of Wealth voyage this February 2025 aboard the Royal Caribbean Symphony of the Seas, a unique no-sales cruise event designed just for experienced real estate investors and their families. Dive into expert-led sessions, exclusive networking opportunities, and enjoy family-friendly activities, all while sailing the Caribbean. Plus, kids ages 10 to 17 attend the conference for free. Register now to lock in our exclusive room rates and save 20% on your conference fee. Hurry, our room block ends October 3rd. Ready for a family adventure that builds your future? Reserve your spot today.
Just fire sale and the investors are out.
So that industry, once again, that's this interview I know is not about commercial real estate syndications. It is understanding that when there's turmoil in the market, there's opportunity on other sides of the market. And I believe that's what we represent. We represent understanding what's happening in the market to point to an opportunity and clarity of it, whether it's rent houses or it's syndications and multifamily or whatever. Nothing is going to be good for 20 straight years. And that's kind of what is messaged to us on Facebook today. Syndications were good 5 years ago, so they must be good now. Rent houses were good 4 years ago, so they must be good today. You see what I'm saying? And I'm going like, this is my 6th real estate cycle. I've never seen anything good for 20 straight years.
And we need those cycles. I mean,
it's just going to happen. Yeah.
Yeah. But cycles are great when you are positioned and educated properly.
Yeah.
There's opportunity in all these different cycles, and I love it. I was hoping that this cycle would have happened several years ago.
Well, it was set to happen, as you well know. You and I have been in masterminds together, and we've seen people like John Byrne speak and that kind of thing. I mean, like, it was set. It was set in 19 to really happen in 2020, and then something crazy happened that should have never happened in real estate. Makes no sense whatsoever. People are all going to get locked up in their house with a mask on, and real estate's going to double in value.
Yeah.
That's about as illogical as it is anything I've ever heard. But what happened in the virus? Okay. So there was a FOMO to people to buy property, right?
Mm-hmm.
So they bought houses. A rent house in 2019 was pretty balanced. It was a good investment. It was going up in value. It had decent cash flow, and it had a lift in value and had tax advantages. Now let's go through the cycle from 2020 all the way through, call it the beginning of 2023, right? Expenses went up by 60%. Rents went up by 20%. Oh, wait a minute. What'd you say? Expenses went up 3 times more than the rent went up. So everybody on Facebook talked about the rents, but what they failed to mention is the expenses were far surpassing that. So a rent house had more cash flow in 2019 than was it going to ever have in January of 2023. Right?
Right.
Now, all of a sudden, you had this big lift in value. So you had this $320,000 rent house that rented for $1,900 a month. Well, that's bad math. And now, all of a sudden, because of expenses, nobody is netting more than 50% of their gross rents. So now, all of a sudden, you've got, $1,900, right? It's $950 a month net rent on a $320,000 asset. You like that math?
I don't like that math, and I don't think anyone should. Yeah.
If you bought a note for $320,000, you're going to get $3,500 to $4,000 in income. If you pay cash on a rent house for the same property, you're going to net $950. Oh, but Eddie, I don't get appreciation. Well, I'd argue you probably are getting it. You're just getting paid today.
Well, and appreciation doesn't feed the family. So
it's kind of like the stock market. When the stock goes up, does somebody mail you a check?
No.
So people like notes because they get recognized income. recognize return of their capital. They like notes because it's hard to deny that for my money, I'm getting a check every month that represents success. Other investments in real estate right now are struggling with that very fact. You're making an investment, but you're not getting paid for it. But a hope and a promise, you're going to get something later. Does that make sense?
Well, you and I, we know all these different aspects, but to people that, and I'll be honest with you, I just interviewed somebody who was also on the Generations of Wealth podcast, who started when he was 21 years old, and he's still in his 20s, and he's buying rental houses, and he's doing good. And everybody can go listen to that show at thegenerationsofwealth.com. But as we started talking, he's never been through a cycle yet. And it was part of why I wanted to have him on the show to compare, right? Just the mindset of a 20-something versus, a couple generations ahead and a lot of mistakes ahead. The time to learn about alternative ways to get quality returns is not when your back is against the wall because your rental properties are failing. Notes and NoteSchool and what you've been doing for all these years, that should be in everybody's toolbox. Whether you want to do notes as a full-time business or you just want to dabble, that should be in everybody's toolbox. And that's where I screwed up years ago until I got into the lending business and I learned the note business, specifically originating notes. I was just under the impression that it was complicated, and it's not. It's just a procedure like everything else. So
here's the thing I would say. Like, there's two reasons people would do notes: less headaches and more cash flow. Right? In other words, because that's what people are complaining about. That young man who I'll guarantee is a hard worker, and he's grinding every day. And I don't know who it was, but I can imagine he's smart, and a lot of people aren't buying into that. Like, that dude's working every weekend, fooling with them rent houses. We know he is, right?
Mm-hmm.
And a lot of people that have investable capital, they're like, I've already tried that. My wife told me buying rentals it wasn't the hobby that we thought it was. And so you could own 1,000 notes for the same labor factor of owning probably 60 rental properties. That is a truth.
Mm-hmm. Right?
So it's way less work, right? The second thing is it's got way better cash flow. I will run anybody's math on any rental they want to put in front of me, right? And say, you're going to get more income from the property on a note on it than you are right now in rentals. Now you say, oh, what about Airbnb? Okay, well, you're running a hotel. I don't know what to say. How much of that's a business and how much of it's real estate, we could argue, right?
Yeah.
So if you want a passive deal, a far more passive deal that does have cash flow, then you and I would say, well, notes are a good thing.
Absolutely. Can you touch on a little bit about how when you buy these seller finance notes, what percentage are you able to buy them at below par or any of that?
So, everybody's first thing that anybody asks when they say, well, buy a note, well, what's my yield? Right? I can take an audience, not of you, Derek, because you run models and you do this every day for a living. Not the guy that does it all day for a living, but the typical pretty savvy investor, right? Have owned some properties, understands math, good, educated. Well, they say, what's my yield? I say, well, it's going to be 10%. Well, 10%, I'm really wanting more, like 11.5. I'm like, really? How much interest income would you make on 11.5% yield in the next 18 months versus 10%? And Derek, you ain't going to believe this, but they can't answer the question.
Mm-hmm.
Like 99 times out of 100. I know there's the 1%er out there. I got it. congratulations, right? But the answer is the returns are probably from 9 to 12, depending on the deal, depending on the time that you buy, depending on the risk, depending on the collateral type, depending on a lot of different variables. I try not to trade loans with a high chance of default, because you can't, if that's what you're buying a foreclosure with potentially an incubation. And that's not why people are doing it. So I try to buy loans with a low chance of a problem of default. And to do that, you're going to go down in the yield ranges a little bit. But running yield on money you've never collected yet is a joke anyway, right? People tell me all this money they're going to make, and I'm like, have you gotten it yet? So I like to say that when you look at a note, what's their propensity to pay? What's the likelihood that that note is going to pay the way you think it's going to pay? And so that's kind of how we gauge it and look at it. Somebody really advanced like you, I could take you to a different level, and we could play the odds, and we could build in a war chest to cover for problems and all kinds of stuff. That's not where people are going to want to start. Not most of the people on your podcast are going to be in this situation, right?
Right.
So for those reasons, people are going to probably be in around a double-digit return, 10 to 11.
Mm-hmm.
I can show people how to make an amazing return. Like, I'm gonna use this is what I draw on my computer with, right? Yeah. This is a timeline right now, right? It's not a drawing pencil, it's a timeline. It represents 20 years. There's $1,000 a month coming in for 240 months. That's 20 years. I buy that note right now at a discount. Let's just say that I buy it for 85 cents on the dollar. Okay, so it's a $100,000 note, but I don't pay $100,000. I buy it at a discount, and I buy it for $85,000. Okay, it has $1,000 a month coming in. I have an $85,000 investment. Let's just say that I did it in my Roth IRA account or my Coverdale educational account. Like you're talking about wealth and legacy and stuff. We're all pretty good at that, right? Then I sell half of that note. I sell the first 10 years of that note for not $85,000, but $80,000. So I got all of my money back, but $5,000. For a $5,000 investment, I'm going to collect $120,000 in payments on the backside of that note. What's the yield on that? Call it enough.
Mm-hmm.
Right? So there's modeling techniques that we become very good at learning how to go take somebody with not a war chest of millions, but a war chest of a little money, and how to go trip it up and turn it into a lot more money. And so that's how we would take and make investments and build retirement accounts with notes.
Mm-hmm. No, I love that. And, for a lot of our lending, when we were originating notes, we were doing wrap loans, and there's certainly different ways to increase your yield, but you go back to yield, that doesn't necessarily equate to high dollars, right? I can invest $1,000 and get a 50% return, but that wasn't a lot of money. So
you can deploy a lot of money. You're not getting paid on a lot of investment.
Right. So when people talk to you about that kind of stuff, not to you, but in general to people listening, it's just like a stockbroker selling a stock, right? They can spin it however they need to spin it. They can talk about annual rates of return or lifetime earnings, or whatever they're trying to sell you on. You always got to look between the lines and get the real truth. But, well, Eddie, why don't you just give us a little bit of information about NoteSchool and what you do over there, and we'll have it in the show notes, but anybody that wants more information can go to thegenerationsofwealth.com/note investing, and that'll link you right over to Eddie. But tell us a little bit about it.
What we've learned is the best thing that we can do for people to get started is we can give them some materials, some good training materials. And then we can spend some time with them to kind of whiteboard out different financial models and what's possible with notes, right? If we can do those two things, that's the most compression of time we can give them. So we have a workshop, a master class. It's virtual, but we're on there with you, and we spend a couple of hours. We probably spend about half the time just pure teaching and about half the time answering questions. So we want it to be very interactive. We love people to come on there and ask questions, right? When you attend, we're going to give you spreadsheets, Excel spreadsheets with financial modeling. We're going to give you book. We're going to give you flow charts. We're going to give you a lot of other things that are going to be like, if I did this, what would it look like? What would that checklist look like? What would the documents look like? What would be the order of events? What questions do people commonly ask about notes? So I got a book that's like the 150 most common questions people ask about notes. That's the fastest way that I can get somebody to understand, if I were interested in notes, what would that be? And that's basically what we're going to offer your audience, because, you can go do all kind of research, but we've already probably done that research, and we figured out what is the fastest way we could put it in your head for you to say, I really want to go learn something about this.
Mm-hmm. Well, that's fantastic. And, I appreciate you coming on and giving everybody just a glimpse into the opportunities that are out there, because like anything in this world, right now, there's a lot of people out there selling, repackaging and selling, go buy property sub 2 and do this with syndications. And it's all, I'm not saying it doesn't work. You and I both know it can work, but to the masses and to the uneducated, it usually doesn't. And notes have been solid forever. I mean, it's, and I don't want to call it a boring business. It's
boring, and making money is a good thing.
Right. It doesn't have the huge peaks and valleys. And that's what I've always loved about holding paper. The only downside I've ever felt like is when somebody pays me off early and now I got to go redeploy capital. That actually sucks. But not when you have a pipeline of new notes, right? But it
or
is
not as bad when you have bought the note at a discount.
Right. Yeah, then your yield goes up. But no, that's awesome. Eddie, I ask almost everybody the same question. What's something I should have asked you that I did not? And it can be about anything. It doesn't have to be about notes, but
yeah, I don't know why I'm 64 years old. I've been doing this forever. Why do I keep doing it? And the truth of the matter is, I truly can tell you that I love doing this. That this podcast interview has given me a lot of joy. And, I love time off, but I don't want to go rearrange my sock drawer every day. And I got crazy lucky 40-something years ago and found a business that I love. So it's not really work to me like it might seem.
Mm-hmm. Well, I can appreciate that because I have the same feeling. People don't understand what it's like to produce a show or to run an education company alongside of running a real estate investment company and all that things. But when you're passionate about it, it doesn't feel like work. So, well, I know I appreciate you coming on and giving us some of your time. I'm sure we'll cross paths at an event somewhere down the road here in the near future.
Yes, sir.
But till we do that, thank you very much.
Great to see you.
And for everybody else, please help us spread the word. Like this, share this, tell everybody about Generations of Wealth, tell everybody about Eddie Speed and NoteSchool. Again, you can get information directly at thegenerationsofwealth.com/noteinvesting. And until the next show, get out there, live your vision, and love your life.
Are you ready to elevate your real estate investing game and enjoy an unforgettable vacation with your family? Join us for the Generations of Wealth voyage this February 2025 aboard the Royal Caribbean Symphony of the Seas, a unique no-sales cruise event designed just for experienced real estate investors and their families. Dive into expert-led sessions, exclusive networking opportunities, and enjoy family-friendly activities, all while sailing the Caribbean. Plus, kids ages 10 to 17 attend the conference for free. Register now to lock in our exclusive room rates and save 20% on your conference fee. Hurry, our room block ends October 3rd. Ready for a family adventure that builds your future? Reserve your spot today.
Thank you for joining us on another insightful episode of Generations of Wealth. May your newfound knowledge help you in leveling up your own strategies to get through the many obstacles to your money-making processes and bring you much closer to the financially secure life you truly deserve. Continue filling up your accounts and further polish your financial tactics by listening to more episodes of the podcast at thegenerationsofwealth.com. Because in your wealth-building journey, there is no other way to go but up, giving you the chance to finally live your vision, love your life. That's all for now. See you on the next one.